Good afternoon, February 23rd, Monday. And stocks are closed. Bell has rung. Pretty muted day overall. Started out pretty hot, kind of surprisingly. And then things just kind of chopped around. There's two big sell programs that kind of pushed us back lower. We tested the 50-day on the S&P 2, 3, 4 times there late in the day. Bears hung on for dear life, or bulls hung on for dear life, I should say, and we closed, up 14 points. Not bad. That's not bad. I do think if you look at the daily chart of the S&P, it looks a little undecided, to say the least. It's got some really ugly wicks in there. But I wanted to talk about a few things today. We'll try to keep it on the shorter side, but that doesn't seem to be working very well. Sorry, I thought I had this pulled up. I did not. All right, here we go. So the selling kind of started off around 9 with, where is it? Business sentiment, which came in way lower, and there's a bunch of comments about how, transactions have just kind of came screeching to a halt, which ultimately is probably what the Fed wants, but I do think things are really starting to crack here, and bulls need to. I think I'm out of focus. I think that looks better. I think the bulls are on, I said it before, borrowed time. And we keep testing this key number around S&P 3980. It's a real choppy range we have going on right now. And usually that means the battle is on for next direction. And if data keeps coming in hot, not what the Fed wants, then I think if we start breaking down, this thing could get pretty cataclysmic. I think it will have kind of a self-fulfilling self-feeding cell program. I think we're due for a 90-point day in the S&P again. I think it's going to be to the downside, but you never know. You just never know. I do want to talk about a couple other things. I remember last week we talked about how they, the they in the markets, the big boys who basically run it, the Citadels, the Black Rocks, all the other giant frauds. A headline came out today saying Apple is bringing chips in-house, and this is something we've heard twice now over the past 6 months, so take it with a grain of salt. But what this would do is significantly dampen Qualcomm numbers, and Qualcomm somehow held on. It immediately flushed $2, but it ended the day down under 1%, 0.75% down, so down like 90 cents. The daily looks dicey as can be, but if the market really believes a headline like that, they don't wait. They reprice as quickly as possible. That just didn't quite happen, so it's something to keep an eye on. Is that a recycled headline again? Is it not? It's annoying. It's very annoying. YouTube TV is having problems. That's interesting. I wanted to talk about Cleveland Cliffs. This is one of my favorite companies back in the day. Actually, when things were looking really dire a few years back, they had a bunch of bonds outstanding, and I bought I bought their 2040 bonds. It's like 6.5% coupon on it, but it was trading around 38.40 on the dollar. That's one of my greatest buys. I think the yield, I think I got to do the math on it. The yield was like 17, 18, 20%, something like that. I forget. I kind of scaled into it, so I forget what the actual number was, but it was right around 20%. Anyways, that CEO LG is unreal. Just a total hard ass. Hard ass and an executor. Basically, when he came back, he goes, yeah, we're going to get rid of all of our debt and basically all of our bad assets, and we'll be fine in like 3 years. And that's exactly what he did. That stock was trading about $2. Their bonds were all junk. Those bonds went above par, above a buck. They were like, I think mine went to 110 or so. So 110, 1 is par. So if it's a 6.5% coupon, you buy it at 1, you're getting a 6.5% return on that. 6.5% interest rate on that bond. Above 1, that rate goes down a little bit because it's trading over par. So you'll get a little bit less than 6.5. But I was getting 20 because I bought it in the 40 cent on the dollar range. So if you buy it down there and it goes up, you still lock in where you bought it from. Anyways, I think that was one of my greatest shares. Just want to brag. But Cleveland Cliffs came out today and hiked prices of their hot rolled steel for the third time in a month. I think it's $1,100 per ton now. I looked up the price of iron ore. Iron ore makes steel, and the prices have gone up a little bit since last fall. I think we're at about $89. Now we're at about 120. But the all-time high, or the COVID high, it was like $225. And you don't raise prices if demand isn't there. If there's no demand, you lower prices to, kind of stir up demand to try to get a bigger pool of buyers. Like you saw with Tesla when they lowered the price of the Model Y, there was a feeding frenzy of buying up Model Ys. Now, cars are a little different than steel, but it's interesting the demand for steel is so high. 3 times a month is a lot. I think they did one raise a year basically. Obviously they've cut before, but that's something interesting. If the Fed wants the economy to slow down and kind of take care of the demand side of things, hope to damage demand by dwindling supply. Taking care of supply side. Steel prices going up that's not good. That's inflationary for everything, and there's just something to keep an eye on. Definitely something to keep an eye on with inflation clearly ticking back up. So let's see what fucking happens. Investor day in Tesla this week. Let's see what kind of gimmicks Elon comes up with this time. I think it was a dancing human robot claiming that they'll have a full bot in like 2 years, and then they had 3 guys roll out a bot, and now we haven't heard about their bot in forever. Just the CGI video of it walking through some shadows. Look, I don't hate Tesla. I don't hate Elon. I'm just more objective about it. When some people are very passionate about Tesla and very passionate about Elon, and that's fine, but you still have to be objective. Like Elon coming out with a new robot that claims like going to be your butler. Have we not seen any of the Boston Dynamic robots? Any of those videos? Go look them up. Go look at Boston Dynamic robots. These things are doing backflips. They're getting shoved and they're not falling over. They're crawling around. They're assisting humans and picking up bags and bringing them over. They can carry heavy weight. Tesla's nowhere close to that. They had 3 guys roll one out because it didn't work. Boston Dynamics is a decade ahead, and Tesla's not catching them. So let's just be objective about these things. We don't have to. Not everything Elon touches is gold. I mean, look at Twitter. It's struggling. Glitchy as fuck now. So let's just be objective about things. He's not God, that's for sure. Anyways, Investor Day should be fun. Tesla likes to pump going into it, and then the inevitable disappointment of broken glass, bad robots, and underwhelming advancements on FSD. It likes to sell off right after. And maybe, just maybe, that will kind of get us started back down to the downside. But, we'll just follow price action. Don't need to guess in this market. It's kind of designed to F up people who guess. 2 more things. I think I didn't look into it too much, so maybe I'll talk more about it tomorrow, but it looks like any chip maker that wants any assistance ever needs to chill out on their buybacks. Big company that does buybacks is NVIDIA. Maybe that's why we're seeing so many announcements in ER saying they're announcing, tons of companies did announcing giant buybacks. Maybe it's because it's kind of their last hurrah. Keep an eye on that. But if buybacks get regulated, or I think I read that they have to share. I'm talking out of place. I'll look it up. I'll get the nitty gritty and talk about it tomorrow. But if this administration cuts buybacks, that's a lot of liquidity pulled. That's for sure. And that would mean things would go back down. Real quick, Carvana. These guys, I don't know how they're not already bankrupt, but somehow they're still kicking. Looks like this one might be a short squeeze again. Ridiculous. I think they make $125 per car they sell. So if prices start going down, and used car prices are going up, which is a little bit strange to me, but the whole market's strange, so I'm not surprised. But if Carvana has to seriously start liquidating, then that could be a nice headwind for used car prices, which would ultimately help CPI. If you remember, they reweighted the CPI, so 43% of it, or 46%, is now used car prices. So if those start cratering, which is possible if rates continue to go up, car loans are going to go up. Consumers getting close to being tapped out with their on credit. Savings are at lows, credit's at highs. At some point, something's got to break. And if it's used car prices, it'll be good for the CPI number, not necessarily solves any inflation issues, but on the surface and headlines would be a big headwind towards the CPI. So I think that's it for today. Carl Icahn's, I know we talked about his big put position. Let me see if I can find it real quick. I forgot to put it on my watch list, but he's not quite there. I think he's got about 3 weeks left. Let's see. He did the 3900s. I thought he did the 3850s. $39.50 he did. And when did he do that? There. Doing pretty good, Carl. Don't botch this one. Let's see. Valentine's Day. Bought around 25 to almost the same price as he got the other ones. 25, 27, 30 range. Those guys high as $77. So almost 2.5x. That's really good. They came down a little bit, $56 now. So we'll keep an eye on that one. Let's see if he actually takes profit this time or rides them back to zero. But we'll see. It all depends where the market goes. And then last thing I'll just leave you with a question is, why is Janet Yellen in Ukraine? What business does she have there? Why? There's enough going on here where let's focus at home for a bit. And then we can help the world. Anyways, that'll do it for me. I will see you guys tomorrow. We will talk more about those buybacks for sure. And then, what happened the rest of the day. Last thing, I guess, would be yields. Yields came down a little bit, which supported us early. The 10-year still at 3.93. So historically, recent historics, it's pretty high. But if the market's healthy, it can handle 3.9, but it's not healthy, so something's going to break eventually. But until then, be safe, be smart, don't do anything silly, don't be a hero, just trade it and get out. All right, love you, bye.